So currency ETPs are currency exchange traded products. These are products that are listed on exchange and trade daily and essentially provide an investor the ability to trade long or short a given currency pair. So for example, if an investor believes they want to go long the euro against the dollar, they could trade a currency ETP to take that position. There's a lot of alphabet soup around the ETF market. I mean, ETFs are funds, so they're UCITS funds, and there are a wide variety of other products that are similarly exchange traded, have many of the same protections, but cannot be funds because of the fund rules. And currency ETP is an example of those products that have similar characteristics to the ETF in that they're exchange traded, multiple market makers, open-ended, but because of the UCITS rules, they cannot be funds. And they're generally structured as notes, but they give investors, or they operate in a very similar way to an ETF. Well, I think the advantages are like, they're simple, they're transparent, they provide access, and they're exchange traded. Often they're very cost efficient relative to other means of trading, for example, derivatives, options, futures, and forwards. They have lower levels of leverage, no need to manage a margin account in certain cases, as you might have to do when you're trading currencies directly. I think the first downside, I don't think there are many structural downsides. Of course, investors need to understand how the product works, what the index is, but really understanding the payoff profile, for example. What am I investing in? In a currency ETP, generally you're investing in a currency pair going long or short a given currency. And understanding how that works, how the index works, and what kind of payoff that's going to provide is a really important aspect of the diligence that investors must undertake. It's just around $400 to $500 million in Europe in currency ETPs. The US is slightly larger, it's in the billions. In general, it's growing. There are more issuers coming into the marketplace. It offers kind of an alternative for investors, many of whom aren't directly trading futures, forwards, options, and currencies, to get the kind of access. And I think it's getting larger because currencies are becoming more interest for a larger number of investors. They're going to grow. I think, if you look at, for example, the events in 2015, whether it be the Swiss National Bank removing its peg against the euro, which led to dramatic volatility, or the ECB and its quantitative easing program, or the US Fed and the concerns about the rate rise, there's been very much a story this year of currencies being of interest and of being real concern for investors. And as they look for opportunities to trade, I think ETPs are going to provide the solution. Currencies can provide a wide variety in terms of complementing the strategy. They can be used for diversification purposes because they have relatively low correlation to other assets. They can be used for tactical momentum trades. Again, if you're looking at an opportunity, you think, okay, there's going to be a real dramatic move on the back of an event, you can trade a currency that way. They might be looking for kind of a longer term currency strategies, whether it's a carry trade or something like that. They could also use currency ETPs to implement that strategy. So there are a wide variety of trading strategies that might be used to bring currencies into a portfolio and to use ETPs to execute those strategies.